You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 8th day of April, 2022. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We go live every day, every trading day, at 12 noon Eastern. And there are two ways to join the show. The live training room is from 9:30 a.m. to 11:30 a.m. Eastern. That's for members only, or for those taking the trial. But the afternoon broadcast is for everyone. Now, the best way to join the show is to go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the question box so you can ask questions and be a part of the discussion. The way it works is once you go through that 30-second registration, every day going forward, every trading day, you'll get an email right before the show starts, and in that email will be a link. All you have to do is click the link, and it logs you right in automatically. And again, you have access to the question box. The other way to join the show is to go to our YouTube channel, youtube.com/CFRN. Not only do we broadcast the show live each and every day on YouTube, we also archive each and every daily show. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So when you're in the office, at your desktop, use the go-to method because you've already got the go-to software installed. But if you're out and about on vacation, on the bus, on the train, on the subway, just grab any internet-connected browser, point it to youtube.com/CFRN, and there you'll find the live show. And while you're there, be sure to click the subscribe button and the little bell so that you're notified anytime we go live, and it helps more people find the show. So with that, let's open with a word of prayer. Our scripture, Lamentations 3:22. That's from the root word lament. So you don't hear a lot of sermons preached out of Lamentations because they don't get you fired up. But it shouldn't be that way. This scripture says, the steadfast love of the Lord never ceases. Boy, that's good news. His mercies never come to an end. Even better. And they are new every morning. Great is your faithfulness. Every day, I need them. The mercies, all of it, the grace. More than I need food, water, church, or hanging out with friends, I need God's mercy. Here's the truth. I often miss the mark. I get hung up on words, behave in ways that are displeasing, and do not always love others the way I should. The funny thing is, from the outside looking in, I qualify as a good Christian. Go to church weekly, multiple times, read my Bible, go to home group, and seeking to be kind to those I meet, I desire to do what is right. Yet in the secret moments, like many of you, I struggle with fear, shame, and a host of qualities that don't reflect my Father in heaven. Like all who've come before me and will come after me, I struggle with sin and need daily repentance. Yet the Lord chooses to love me past my disqualifications and mistakes, so much so that every morning He extends His mercy to me, and it's His good pleasure to do so. Yet you and I aren't the first to feel like we don't quite measure up. The Apostle Paul found himself in a struggle between right and wrong in Romans 7:15. He says, I don't really understand myself, for I want to do what is right, but I don't do it. Instead, I do what I hate. Yes, even the person responsible for writing half of the New Testament was in desperate need of a forgiving God. He was transparent about his shortcomings and knew it was by Christ alone that he could overcome them. We serve a holy and perfect God. The truth is, He has every right to turn His eyes away from us. However, His love is steadfast, immovable, and never changing towards us. As described in Romans 8:39, no height, depth, or circumstance could ever separate us from His unending love. It's out of His unconditional love that He can say, I offer you another chance every single day. He does. We simply can't outrun His love and the accompanying mercy. Our job is to receive them. Unfortunately, many of us struggle to receive God's mercies. We become stuck between our spiritual desire to do what's right and our fleshly desire to satisfy ourselves. We convince ourselves that our struggles with sin disqualify us from God's love. The shame of our situation, past or current, leaves us defeated and unable to genuinely enjoy the benefits of being a child of God. All the while, the Lord wants to remind us that He died for us before we ever dishonored Him. God's mercy and love were never affected by the depravity of the sinner. It was always backed by the truth of His word. Truly the one He has set free from sin, shame, and guilt is free indeed. His mercy is anew for you if you choose to receive it. So let's pray for that mercy today. Heavenly Father, we thank You for Your steadfast love, for Your mercy towards us that is renewed each morning, no matter the sins of yesterday. Thank You for choosing to love us more than we could ever love ourselves. We praise You for Your goodness and faithfulness towards us, even when we don't deserve it. You show Your kindness relentlessly. Lord, forgive us for yesterday's sins and shortcomings. We grieve over anything we have done that makes a mockery of Your merciful love. We give ourselves completely over to You, Lord. We ask that You show us when we're operating out of shame and guilt. We ask that You forgive us for the times we've rejected Your mercy towards us and have chosen to walk in shame. We receive Your new mercies over our life right now. Thank You, God, that we can walk forward today confident in your love for us. We are free from the bondage and stain of sin. Thank you for your steadfast love that never ceases and for your mercies that never end. In Jesus' name we pray. Amen. And amen. Well, happy Friday, guys. I hope it's a happy Friday for you, whoever you are, wherever you are. Garrett's going to join us a little bit later in the show. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. The Dow's up 240 points. The NASDAQ is down 75. The S&P 500 is up 9, and the Russell 2000 is up 3. In the commodity basket, crude oil up 46 cents, trading 96.49 last. Gold up $8, trading 19.45.80 last. And silver up 4 cents, trading 24.77 last. In the Asian markets at the close, the Nikkei was up 97 points. The Shanghai rose 15. The Hang Seng gained 63. And in the European markets at the close, FTSE up 117, which is 1.5%. The DAX was up 205 points, which is 1.5%. And the CAC was up 86 points, which is almost 1.5%. So that gives us a mixed day in Asia. It was a green day in the UK. And with the NASDAQ being in the red, we got a mixed Radio Friday here in the US of A. So with that, we're going to go to Michael and get a recap of everything that happened in the live training room this morning. After that, I'll be back. We'll look at the logic alerts, the concierge trade alerts, and we'll have a chat with Garrett. Michael, if you're ready, take it away.
Here we go. Coming back. All right. All right, there. You should be looking. Let me just make sure. Yes.
Yep.
All right.
You got it. It's all yours.
All right. Good afternoon, everyone. Today is Friday, the 8th day of April, 2022. All right. So if you've not taken a free trial with us, then go here to eminitrainingschool.com. On this page, all you have to do is scroll down to right here where it says 1 week free trial. Put in your first name, your email, and your phone number. You can tell us to be a trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that confirmation link, we don't know that you took the free trial. So make sure you click on that confirmation link, okay? Okay. The spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today started off great. I mean, it ended up okay, but started off great. We got our goal for the day in less than a minute. Anyway, today is the 8th day of April, 2022. We made 46 ticks in crude, 25 ticks in gold, and 8 ticks on the ES. Put us at plus 810 on the morning session. Today it took 30 seconds and one trade to get to the goal for the day. At that point, we're up $110 a contract. We went to a total of 27 trades this morning. So on the month now, we're at $6,757 a contract. That's over 6 trading days, averaging $1,126 per contract per 2-hour trading day. We've now gone 130 days since our last negative day. That is 130 business days. And so far this year, 68 out of 68 days, we've gotten our goal. On the year now, we're at $76,666. That's averaging $1,127 per contract per 2-hour trading day. This is pretty much unheard of. At this point in the year, we've never done that before. The volatility is just crazy. Anyway, if you were to quit trading when you got your goal for the day and you added 1 contract per month, which is where we want you to be, okay, then we just want you to be consistently profitable like that. Then you would have only worked so far this year 9.4 hours and averaged $2,057 per hour if you did everything exactly like I did in the morning. Okay, so I got my goal for the day. All right. All right, let's get into the actual trades. The ES, we'll start there because we hardly had any on the ES today. The ES was kind of bouncing all over the place. Our first trade on the ES was right here. Now that was like an hour and a half into the morning. Yeah. See, it started off really nasty all through here. I guess right at the very open, there was an opportunity to go short right here that I missed, and it went right down to the weekly trading zone, and then just kind of hugged that zone for a while. Now we didn't have any trades through there or there or there. Then it got all messy down here, and it worked its way back up to the zone. There was one highest probability trade right here to grab that. I got up into the zone, got away from it, got back down to it, went through it again. Looks like it gave one more short trade right in here. Another short trade right here. Moved over back to the zone again. It was hugging that zone all morning. Then it went from this zone right up to that zone. You can see right in here where it started to move, it gave one long trade right here, and all this move up gave one long trade because the slingshot was only going to get into it once. Then it got sideways, hit the zone. We took our first trade over here, finally our first trade, and we stopped out -8 ticks. The second trade, we picked up 10 ticks, so we're back to +2. Then the third trade, we picked up 6 ticks, and we got to +8. Fourth trade, we got a break even on. And that was it. Now, during the break, there was nothing. No highest probability trade setups during the break. That was the ES today. It was a little bit of a puzzle. It wasn't really easy to trade. I see my charts are disconnected right now. That's because I logged on during that break from another computer, but it doesn't really matter. So you're not going to see everything during the break. You're just going to see up to where I logged on another computer. Anyway, this right here is not where we got the gold for the day, but this is where we got 7 ticks. Our first trade on gold, we got 7 ticks on that one. 1 tick there to put us at +8. Then looks like only 5 ticks to get us to +13. I think something's missing in here. There's one trade in here that's missing because we got 5 ticks to get us to +13. And then we got 13 ticks to get us to +26. Then we had a break even and another break even, and another break even. And then went from 26 to 31. I don't know, that looks like something I might have forgotten to put in. And another one right there. Looks like I forgot to put that in. Looks like I forgot to put that in, but I'm sure I put the stop in. Yeah. Had a break even there. Looks like I forgot to put that in. But anyway, let's say we're at 31, then we stopped out. That put us back down to 23. Then we had a 1 tick gain right there to put us to 24. And we had one more 1 tick gain there to put us to 25. So I missed that trade, and that trade. It looks like I forgot to put those in. So we ended up with much better than what it says. But well, it is what it is. During the break, there was one highest probability trade right here from what I can see, but you can see I shut it off when I logged on from another computer. And that was it for gold. All right, so we ended with +25 on gold. It was really +40, I think, but I wrote down 25, so that's what we're sticking with. All right, crude oil. Now, crude was doing pretty well today. It was giving some good signals and good target numbers most of the time. So it was good to trade. This was our first trade on crude. This is where I got the goal for the day. I picked up 11 ticks on that one. Right, and you can see right here that is 9:30.09. I started right before. Well, it says I started right at 9:30 even, but I didn't realize I was sitting down a few minutes early, and I was wondering why nobody was there. Fortunately, Bert and Val were there at least, and they told me I was early. Unusual for me. So I picked up 11 ticks on the first trade and 15 ticks on the second trade. That got me to 26, and then I can't read that. I didn't add that in, whatever that was. And this is crude oil, right? Yeah. So I'm missing a couple of big trades here. But anyway, I went from 26 on my sheet. It says I went from 26 to 18. So it says I stopped out here somewhere that I didn't write down. And then I didn't add in this win. And I didn't add in this win. So we just go with what I said. We ended up at 32 over here after that one. Okay, then we went from 32 to 39 right there, I think. Then 39 to 52. Somewhere. 39 to 52. That doesn't look like 11 ticks. That could have been 11 ticks over there. Then 52 to 55. And then we stopped out, went 55 to 47. Okay, and then we stopped out again, went from 47 back down to 39. And then we had a win, went from 47 to 39, went from 39 to 43, then 43 to 45, and then 45 to 46. Somewhere. Okay, there was one tick gain here somewhere that I didn't put in. So we did have some big wins in there that I didn't put in, and one stop out that I didn't put in. But somehow, out of all that, I managed to put down a gain of 6 ticks overall from the 2 big wins and the 1 stop out. And let's see, during the break, let's get into the break here. The break part that I have anyway, there's just a little bit of it. There was one highest probability trade right here during the break. And that was it. And that was it for the morning session, guys. Let me go back to the spreadsheet. There we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of April, 2022. We made 46 ticks in crude, 25 ticks in gold, and 8 ticks on the ES. Put us at plus 810 on the morning session. Today it took 1 minute and 1 trade to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 27 trades. So on the month now, we're at $6,757. That's over 6 trading days, averaging $1,126 per contract per 2-hour trading day. We've now gotten we've gone 130 business days since our last negative day, and we've gotten our goal for the day on 68 out of 68 days so far this year, putting us at $76,666, averaging $1,127 per contract per 2-hour trading day. Okay, Dwayne. I want to let everybody know, I don't know how many of you guys that are in here are NinjaTrader guys who don't know yet. I think you all know, but I'm going to go through this anyway because it'll be in the recording that's on YouTube. If you are one of our NinjaTrader guys, sorry, I got to go finish the rest of this. Sorry. So if you were to quit when you got the goal for the day, if you were to quit when you got the goal for the day and you added 1 contract a month, you would have only worked 9.4 hours so far this year and would have averaged $2,057 an hour. Now, if you've not taken a free trial with us, go here to eminitrainingschool.com. On this page, all you ask for is your first name, your email, and your phone number. You can have the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and we'll send you a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial. Okay, so I'm going to say this again for everybody who is a NinjaTrader guy for us. We finally got the sidebar paint bars done on NinjaTrader. Okay, so all you have to do is go out on Telegram. If you don't have a Telegram channel, this is a public channel. If you don't have a Telegram channel, then email Valerie at support@cfrn.net. She'll send you detailed instructions on how to set up your Telegram channel. All you have to do is go to NinjaTrader 8, start here. This is what you type in. Search for NinjaTrader 8. NinjaTrader is 1 word, space 8, space, start here. I think if you just do NinjaTrader space 8 in Telegram, it'll probably get it to you. This is the file you need to download. This one right here. This is the video right here. Okay, the video tells you detailed instructions on what to do. It's really, really simple. Okay, if you have any problems with that, let us know. I went through yesterday, and everybody that is a NinjaTrader that has been a NinjaTrader since the beginning of April, meaning your indicators are not expired since the beginning of April. I set everybody up, I think. There may be a couple of people that I missed because there are so many, but I think I set everybody up so that all you have to do is install it, and it gives you the instructions about restarting Ninja and whatnot. Okay, I mean, you can see if you watch the video right here, it's going through the things little by little right here. And it's really only like a 1.5-minute video, 2-minute video. Okay, so take the time to watch the video and you'll know exactly what to do. Okay, now Dwayne's not ready yet.
Yeah, I am.
Oh, he is. Okay, Dwayne's back now. Okay. Well then, with that, we can pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Mountain, America's largest city park. Dwayne?
Okay.
You
Here
are ready.
we go.
And Jeff, I'm going to send you an email in a few minutes. It's got a link to the meeting at 4:30. And the other Jeff, I'm going to send you one for the meeting at 3:30. And Anthony, I already sent one for 2:30. There you go. All right.
Okay, recap of the recap.
Today, it took 1 minute and 1 trade to get to $110 a contract.
Can't beat that.
Ooh, a big stick.
And all the questions in the box, so that was just a comment. Okay. All right.
Yes.
Well, good job.
Right. Excellent. Okay.
All right, guys. Logic 247. We're in week 192. The volatility and the lack of follow-throughs made for a difficult week. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 56 alerts. 4 never triggered, still waiting on 1. 51 actionable alerts, of which 6 or 12% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step process that we teach all of our passport holders. Now, the logic alerts are based on current price action, and they come out around the clock. Our original alert service, the concierge trade alerts, which have been around a lot longer than 169 weeks, they come out as a static report shortly after the Globex open. So we were about an hour and 5 minutes after the open last night when the alerts came out. Once posted, these numbers are good for the entire session. Important to remember, once an alert triggers, logic or CTA, there's a greater probability of it triggering multiple times than not triggering multiple times. Now, you probably don't trade all the markets we cover, but whatever markets you do trade, when this report is published, go to the chart of the markets you do trade and make note of where price is at that moment in time. Because moving forward, if price starts trending up towards 45.09, that's bullish. So our strategy will start looking for opportunities to be long the market. Often you can, by using logic and everything you learn in the live training room, you can have your points for the day before we even get to the CTA. On the other hand, if price starts trending down towards 44.67, that's bearish. So our strategy will look for opportunities to be short the market, and that's where you'll use logic and everything you learn in the live training room to yourself find opportunities to be short the market. So if you want to grab a screenshot, do it, and then we'll take a quick walk through each one of the markets. We'll start out with the daily chart, as we always do. And we're in an interesting situation. All right, we're in a downtrend for quite a while. We're now in an uptrend. The last leg up, the low was put in March 15th at 41.29.5. And then the most recent swing high was put in March 29th at 46.31. We retraced to the 24% fib, caught a pretty decent bounce. Then we pulled back to the BBC, and we've been struggling at the daily BBC for now 3 trading sessions. Normally a pullback to the BBC on the daily chart would give us a very nice bounce. So we've had a decent bounce, but we're up against resistance at that 24% fib. See, coming down, you expect it to be support. But as if you move back up, then it can be potentially resistance. So we're at resistance at the 24% fib and the daily step line. If we can overcome the daily step line, then there's a nice window of opportunity from 45.40 up to about 45.60. So there's about 20 points in there. Now, for anybody that's new, the green lines called the BBC stands for Bull Bear Cross. When price is above it, we're bullish, looking for higher prices. When price is below it, we're bearish, looking for lower prices. Price is above it, so we're looking for higher prices. Now, we spiked the BBC on Wednesday, we spiked it on Thursday, and here we are Friday, still trying to climb. The pullback holds more often than it doesn't. It held here, and here, and here, and here, and here, and here. And now it's held here. But it hasn't given us the powerful bounce that we typically expect. And we have the ominous red and falling overhead. So if you trade in this window of opportunity, be conscious of the fact that red and falling is currently at 45.70. So that's why my conservative window of opportunity is about 45.40 to 45.60. Okay. The CFMA1, which is the red and blue line, I refer to that as red and falling, blue and climbing. One represents resistance and the anticipation of lower prices, whereas blue and climbing represents support and an anticipation of higher prices. Now notice what happened as we put in this high. The step line crossed from the left side of blue and climbing to the right side. That's telling us price is going to try to pull back to the BBC. Now this is true on all markets and all time frames. This is the S&P daily, but the same thing is true on a 30-minute crude chart, a daily chart of Apple stock, a weekly chart of the euro, and a monthly chart of Bitcoin. Okay? All markets, and I know this is hard to comprehend and hard to understand, but all markets, price flows the same, from support to resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. Our indicators serve as dynamic support and resistance, and the weekly trading zones, they serve as fixed support and resistance for the entire week. The zones are published Monday morning at 6:15 a.m. Eastern for our members. We've published the zones since December 14th of 2009. Now, as I said, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. I've already drawn in 2 windows of opportunity, which I'm waiting for price to get to one of them. Here was the first trigger last night. Here's the open. We pull back to the BBC, the pullback held. Red and falling turned to blue and climbing. The CTA was at 45.09, and so the first little pop took us to 45.1175. So that's 2 3/4 points. Then we dipped back below the trigger, and we ran up to 45.1975. That's 10 points, 10 3/4 points. And then we dipped back below. We came back to the weekly zone and the BBC, both of which we expect to be support on a pullback. So this is sort of support times 2. Unfortunately, on this trigger, not all triggers are created equal. You got red and falling right overhead. So it's very risky to go long at 45.09 when you know you may potentially run right into resistance, which is exactly what happened right here. and see how red and falling walked the price down. And then we caught this mysterious candle that came out of nowhere at 10:30 this morning. There was no economic reports, not sure what brought it on, but price came down, spiked the zone, but ultimately the zone held. We overshot the area of the bullish cross, but we quickly recovered, and then we went from zone all the way to the zone. And this trigger took us up to 45.12. This trigger took us up to 45.16. So we got a high, and we got a lower high. And after this move up to 45.16, which is 7 points, is what the market made available. At $50 a point, that's $350 per contract traded. Now, there's just not much conviction in the markets. I pointed this out yesterday. I drew this in and put it in the discussion group early on yesterday afternoon. I said, look for resistance at this spot. And that's exactly where the market found resistance. Okay. And so that high was slightly taken out, but just by a little bit. And so we never trust a new high that's a new high of only a few points. And we can see what happened. Price got below the BBC, made a run at the zone. Price is always trying to get to a zone. If it's above the if price is above the BBC, it's trying to get to the zone overhead. Okay? Does it always make it? No. Sometimes it runs into obstacles. When price is below the BBC, it's trying to get to the zone below, just like it did. So we never had an actual trigger on the short CTA. On the Dow. There we go, that's better. Okay, here's where we opened. Came right down to the weekly trading zone. We consolidated for hours. Only three things happen at a weekly zone. The most likely is consolidation, which you see right here. Second most likely, that's consolidation. That's consolidation. Second most likely is rejection. That's this. We had a big green candle, but by the time the 30-minute candle closed, we had a red candle. So price was rejected at the zone. Okay. And so we consolidated, and right here, price met up with the BBC. Price always reverts to the mean, which means no matter how far price goes in either direction, up or down, it's going to always come back to the BBC. And on the 30-minute chart and higher, that pullback will hold more often than it doesn't. So the trigger was 34,550. First trigger took us up to 34,572. That's $100 per contract traded. Then we get back below the trigger, and we run up to 34,590. That's 40 points at $5 a point. Then we get back below the trigger, and we run up to the target at 34,640, which is 90 points or $450 per contract traded. And then, again, the market found resistance at the zone. We got below the BBC. Price is always trying to get to a zone. It got there. And then it did an about face. Triggered again. Unfortunately, right here, you got red and falling. And so, if you're new, you should pass. If you're one of our more experienced traders, then there's a good entry right at about 34,580. And that took us through this high, and we made it all the way up just shy of this zone at 34,830. Okay. And we never triggered on the short side. On the Russell. The vertical line, by the way, separates today from yesterday. All right. So from 2001, the first trigger took us down to 1999, basically. No, took us down to 2000, basically. So a point. And then we get back above the trigger. And all it gives up this time is a little more than a point. What's the low? 99.6, yeah. So 1.5 points. Nothing to write home about. And then we get rejected, and we finally trigger on the long side. And from 2009, we make it up to 2011, so that's 2 points. We get back below the trigger, trigger again, and we run right up to yesterday's high. Once the market finds resistance, you should expect that area to continue to be resistance until proven otherwise. Okay? And this bearish cross that led to this big move down, when price came back to this area, it spiked it because there was a lot of buying and selling pressure both. But ultimately the area did serve as resistance. Took us back down. We're already below the weekly. Looks like we're going to close the week below the lowest weekly trading zone on the Russell, unless something kicks in gear. So this move took us up to 2015.9. So that's 6 points, $50 a point. We get back below the trigger. See how the pullback to the BBC held? Off we go again. Blue and climbing. That's what you want on a long trade. And there's that 2015 high again, so another 6 points. Then we get below the BBC, and the short trigger, 2001, took us down to a low of 1987. So that's 14 points, $50 a point. Then we get back above the BBC. We trigger again up to 2015. There's 3 triggers that took us to 2015. We got back below the trigger. And on this move, we made it up to 2013. That's 4 points. And then on this one, the low of this candle, we got 1 tick below the trigger and put in a high. Looks like 2012. Okay. All right. NQ. Now the NQ pays $20 a point. So the market opened here. It ran up and triggered from 14,666 up to, 566 to 575. So it's $200 per contract traded. Then we got back below the trigger, found support at the BBC, resistance at red and falling, support at the BBC. Whenever the market finds support, it's going to go look for resistance, and you know to expect resistance at red and falling. And when price drops to the BBC, you know to expect support. And so then we trigger here at 566, and we make it up to the target at 620. So that's about 60 points, $20 a point, $1,200 per contract traded. We dipped below the trigger again, but unfortunately this time we got red and falling overhead, so not a trade you want to take. Then we triggered on the short side, ran right down to the target. From 455 to 348. I'll break down and use my calculator. 455. 455 minus 349. It's 106 points. $20 a point. $2,120 per contract traded. Now, when you start out with us as a passport holder, you go to class. It's an interactive environment. You've got a trader, Michael, Valerie, taking off trades, explaining every move they make, every trade they take, the rule behind it, and answering your questions. Now, you are trading along in your simulator. Your goal is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then our 24/20 blueprint gives you the green light to go live with one contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you accomplish that, the 24/20 blueprint will give you the green light to add a second contract. The second contract's a big deal because the first contract was underwritten with your startup capital. But the second contract, that's underwritten with profit you earned in the market. The blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 10. But you only add one at a time. And you only add with profit you earned in the market. So if you've been with us long enough to earn the right to trade 10 contracts, this $2,000 move per contract becomes a $20,000 move. Okay? Don't make the mistake of putting the cart before the horse. It's awkward for both of them. Okay? It's a process. Stick to the process as it's laid out for you in the 24/20 blueprint. Trade in the simulator, attend class, ask lots of questions. As a passport holder, you have unlimited access to one-on-one mentoring on top of the 2 hours of live training you get every day in live markets. Only go live once you've put together those 10 consecutive days in a row, and only go live with one contract. Now, I realize that 2 points out of the S&P is $100, won't pay your bills. But by the time you earn the right to trade 10 contracts, then 2 points out of the S&P probably will pay your bills, because that's $1,000 a day. It's $5,000 a week. It's $250,000 a year. Obviously, if it were easy, everybody would do it. Trading's not easy, but it can be simple. We've worked hard for many years to make it as simple as we possibly can. Okay? And the rules don't change every other week. We haven't changed a thing since 2008 in regards to the underlying principles upon which our strategy is built. Our strategy is not designed to beat the market or outrun the market or outsmart the market. Our strategy is simply designed to do what the market is doing, because the market is always right. Now, in the Logic 247 channel, we've published over 10,100 individual alerts over the last 169 weeks. And we know that on average, 20% of those will get stopped out based on that $300 risk profile that I gave you. And the reason that happens is because order flow switches in the middle of the trade. You get into a long trade because there's more buying pressure than selling pressure. But that can change, and you have no control over that. So stop looking for ways to never get stopped out, because that doesn't exist. Only in the imagination of the people who write the slick ad copy that you'll find on most websites and most of the emails that you receive. This is the truth about trading. Okay. All right, so we've covered the S&P, the Dow, the Russell, the NQ. Crude, interesting session. Crude's pretty flat, but from 97.35 up to the target at 65, that's $300 per contract traded. another $300 per contract traded, another $300 per contract traded, and this time we didn't make it all the way to the zone. We made it to 49. So that's $140 per contract traded. We went from, here's where we opened. We came down to the zone, up to the zone, down to the zone, up to the zone, down to the zone, and then almost back up to the zone. The zones will become one of the most powerful tools in your trading toolbox once you learn how to use them properly and understand. The indicators are dynamic support and resistance. The weekly zones, which we've published since December 14th of 2009, that's your fixed support and resistance for the entire week. These zones were published Monday morning at 6:15 a.m. Eastern, and here it is Friday. Support, resistance, support, resistance, support, resistance. The way price behaves around the weekly zones has not changed. Hey, there's Garrett. Garrett, is your mic open? If not, let me open it for you. Let me find you here. There we go. Hey, Garrett, welcome to the show.
Thank you. Yeah, I was trying to click on it there, but no luck.
Yep, well, we can hear you loud and clear now.
Good, good, good.
When we triggered on gold last night, guys, the trigger was 1937. Ran up to 38.3, $130 per contract traded. Got back below the trigger. And then we ran up $160 per contract traded. And then here, $80 per contract traded. But notice as we pull back to the BBC, the pullback holds. This time we run all the way to the target, which is $300 per contract traded. Back below the trigger, another $300 per contract traded. And then price kept going. Right now we're trying to pull back to the BBC and the weekly trading zone. Once we get there, we expect that to be good support, and then we will be looking for another long trade as price tries to get to the zone overhead. Silver, I don't think much happened. 24.82, we made it up to 84, $100. We had red and climbing here, so you want to stay away from this one. And on the euro, yeah, we had several triggers on the euro on the short side. And I'll let you guys calculate that, but that's a pretty good chunk of change. So, we made it through all the markets. Here's where we're at on the daily chart. We're up against the 24% fib. Okay, when price comes down, we expect it to be support and give us a bounce, which it did. Now we've come down to the daily BBC, which we expect to give us a bounce, and it's trying, but it's got to overcome the step line. So the window of opportunity is 45.40 to 45.60. That's 20-point window of opportunity at $50 a point. That's $1,000 per contract traded. If you've earned the right to trade even 5 contracts, that's $5,000. Okay. So Garrett, let me send the charts over to you. I'm guessing you got some stuff you want to show us.
Yeah, I lost my charts, but I'm hastily trying to throw some of them in there. It's okay. I will.
So you want me to pass it over, or?
Yeah, give me just 1 second, and I'm going to copy and paste a chart in there, and I won't have the ones the full charts that I wanted to show you, but at least I'll have some that I can show you. So
here, let me fix something. Jeff said I had a mistake on my NQ. Let me see.
There we go. I'm all set.
14,445. Oh, he's right. Thank you very much for that, Jeff. This should be 14,445. 14,4. 14,445. Okay, so that changes things a little bit from 45, from 445 down to 348. That's just shy of 100 points at $20 a point. I guess that makes it just shy of $2,000 per contract traded. Thank you for bringing that to my attention. Okay, so now I can pass it over to you. There you go.
Oh, here we go. I see it. Click.
That's a really good question. Are we there yet?
Yeah, what I was thinking about, what I wanted to and had together to show to you and will do next time is, the question is, are we there yet? And how the heck do you know? And then there's sub questions like, is it different this time? And usually it's not. The classic example of is it different this time was, in my mind, probably 2000 with the dot-com bubble, because what they were saying at the time was, it's a new economy. We've been in the industrial age for a long time, but now it's the information age, and it's entirely different. And all the things that we used to use to try to create valuations and so forth, you have to throw them out the window because it's a new economy. It's a different deal. So yeah, we've got some of these PE ratios are at 100 and 200, and some of them are infinite, but that's okay. And as it turned out, it wasn't okay, and it wasn't different this time. It was just we're in a it's not different this time. The greed and fear factors are still there like always. And when you get overvalued, you get a big correction. And, the NASDAQ 100 saw 83.5% correction and took it, 10 years or whatever it was to regain that, in the bull market. And now, of course, we've got a similar thing going on. But in addition to that, we're about 90 years into this cycle. And these are basically 80-year cycles with maybe a 10-year plateau period in between there as far as long wave cycle analysis. So we're getting close to the end of the cycle, and the things that you look for at the end of the cycle, are a lot of things. They come up with conspiracy theory, and people and of course it's not conspiracy theory, it's conspiracy. They add theory to it because they want to make it questionable, like right. Is it a conspiracy? And then of course when you start to question it, rather than looking into it and analyzing it, they don't want to do that. They just give you the answer. Like that's what our news, as we've talked about before, it doesn't really report the news anymore like it did when we were kids. It just reports a narrative, and it doesn't let you figure it out for yourself. It doesn't say like, here's what happened. What do you think? Could it be this? Could it be that? And no, it's here's what happened, and this is what it is. This is how you need to think about it, and our narrative will anyway. So anyway, that's our environment now. And the comment is, oh, this is conspiracy theory, and oh, by the way, conspiracy theory is crazy. But the funny part is, what you do in analysis is that you go back to prior times and you look at different times in history, and lo and behold, when you get to the peak of these long cycles, not only is conspiracy not a goofy thing, it's probably even part of the cycle. I mean, you go back to the Roman Empire, and you have, et tu, Brute, when, Caesar was stabbed by Brutus and the other guys. That's certainly a conspiracy. And anyway, so it's up for grabs. Do we have one now? It certainly appears like we do if you really look at things. But the whole point of that is just to tell us where we are in the cycle. We really can't do anything about it. But where are we? That usually comes in, toward the end of a cycle. It's part of what collapses a cycle in reality. So that was kind of the question. And the other thing one of the things that I had for you that I'll bring up next time is I did a Fibonacci time situation and broke it down between all the highs and lows in between the ultimate low after the Great Depression peak in 1929 from the low in 1932 is where you start this cycle. And the measurements on a Fibonacci basis are just incredible. I mean, they all come into either 2021 or 2022. And of course, if you average those two out, you're right there in early 2022. And that's where we had our top, or late 21 if you're looking at, the technology stocks. So anyway, I was going to share that with you, but I lost it. So I'll share something else with you. This is the S&P, and this goes back to 95 when that cycle started. And this is just a simple oscillator that I use to kind of see, where we are. And this is interesting because as it was, when the red line is above, it's, you want to be long. And here you had a little dip. This was in 1998, again, during this big run in the tech stocks. And then it ran up and kept above the yellow line, finally crossed it right there, which is theoretically where you'd get out and go short. And it would stay all the way down there and comes back and crosses here, and you cover and go long, and it stays above the entire time, and you go short here and come down here, and boom, you're back in here, and so forth. So looking at this, 10-year period, boy, life is easy. You just follow this thing, and you go long here and short here and long here and short here and long here, and life is easy. Here it came down, and I don't know whether you dipped below it or not there, but you came right back up, and you got yourself a little volatility. But again, you get this huge run up here into 2015. Finally, you get that break there, but you're coming back above it again, and we've stayed all the way long on this thing up until this 2018, which was really an extreme, and we broke it there very briefly, and have come back up again to see this big. I should have put in this megaphone pattern here, and this part of the megaphone from here to here, this is just extreme and ridiculous, and it matches the down part here. And lo and behold, we come up and make what's ridiculous here look absolutely incredibly ridiculous with what we've had. And ironically, this all happens, if you look at the chart here, you've got 2019 here, 2020, everything's fine here. The economy's doing well. We've, energy prices are reasonable. We supply our own energy. We're energy independent. We become an exporter of energy. All at this point right here. We've got a wall being built. We don't have a bunch of all the people that are, if you got a good heart and you think, gee, here's a nice young couple and their children, and they want to come to America and have an opportunity to, better their lives. Part of you have to say, gee, that's great. I mean, we can't support the entire world, but you know, it would be nice to maybe help some of these people. But when 80% of these guys are between 17 and 25 years old and all males, somewhere along the line, you probably ought to ask what the heck is happening, number one. Number two, what are we thinking, etc. But apparently those questions aren't. Anyway, that wasn't a concern here. We had a wall going up. We had Border Patrol that was trying to do their job and doing their job. And then all of a sudden COVID happens and the economy falls apart and people aren't going to work. And now we've got a new president because apparently something was wrong with what was going on here. And everything's turned upside down and gotten much worse. Energy prices, the whole thing. And lo and behold, this happens. This is really good. This is really bad. And now all of a sudden everything's great except for what we're looking at and hearing. So something's off here. You know, this shouldn't be above this, but it is. And we have to play, you know, it's like golf, right, Dwayne? You got to play them as they lie. So, yeah, and then, by the way, I'll give you a plug for Dwayne, because you've got a situation now. And I wanted to show this on one of the other things I had. I wanted to show where the indicators just got absolutely ridiculous. And normally they don't have to get ridiculous before you get some really good signals. And somehow the market continued to inch on up to a point where they just got, you know, to insane levels. And then finally you got a top. But Dwayne's methodology is really great, because you can't do anything about the economy or politics or anything you like or don't like. It's just, you know, you kind of get dealt a hand. And what Dwayne's doing with his program, it doesn't matter. His thing doesn't take a look at politics or unemployment or anything else. It looks at the market, and he's got tried and true methodology of what to do, and doesn't have an opinion on the up or down. You know, the market's going to go up or down. It's going to do it when it wants to do it. And Dwayne's got a good method to take advantage of that. And you can see, you know, at various times when things like this, you know, they always make sense. That always makes sense 100% of the time, but sometimes it doesn't seem to make as much sense as other times, because you have time periods in the market like here where everything's just going up and it's real easy. You just buy something, follow the guys on TV, and you can't go wrong. Well, when that stops happening, then you got a problem. And these difficult times where you get this type of stuff, not only, you know, Dwayne's program, it just, you know, you're going along and you're taking a piece out of the market here, taking a piece out of the market there, and whether it's going up or down, you wind up overall taking a piece out of the market, and that makes a great deal of sense no matter when you're doing it. So anyway, this is what I look at for my long-term chart, and like I say, I apologize. I had some other things I wanted to show you that flow much more, which flowed a lot more than what I wanted to show you here, but we'll do that next time. But this is my monthly chart, and again, I've got these, you can see these two oscillators in here. We cross over here with a buy. I've got another buy signal down here. We've got a buy signal here. So here's when you buy, and by and large, you're just staying along with it until over here. And that's this sell here. And that's because I'm getting a reversal here. And this, at this point, you don't get a crossover. So it's not giving you a big picture sell. At the moment, it's saying, so far, this is just a pause. But what's happened here, and why, you know, one thing is that tops take a long time to build. Bottoms can happen in a hurry like this, but major tops, as we've seen, are almost never ending when you're really at a long wave cycle peak. Those peaks can last for years. Here, we've got this type of a move, and now these lines, which have been going up and going up, are now coming out sideways. and a lot closer. And this is where you really got to watch it. Sometimes if you have a more aggressive short-term market, you have what you call a spike and a ledge. I mean, this kind of looks like that, but it's a monthly chart. So, but this is kind of one of those things where it's like, beware. We may turn around and go back up, and who knows, anything can happen. But when you're losing momentum here, and when your longer term is flattening out, and you're below a peak, at this point, this says that might be the peak. That's where a lot of things on a Fibonacci level pointed that a peak should come, or it would be an ideal time for it, and it did come. So you've got to kind of be aware that that might be the peak, and this could be a wave 1 down and a wave 2 up, and somewhere in here, when this completes, theoretically you get a wave 3 down, which can take you down pretty, with a little excitement. So you've got to be aware for that. So that's what I'm pointing out there in the monthly chart. This is a weekly chart, just trying to break it down a little bit to see if the weekly gives you any more information, or helps a little bit with a little bit more of a tighter focus. And again, you see it here on the weekly. You come up here, you get a divergence here. So this is nice. You get a divergent sell signal right there at the top, and your lines on the weekly, again, that they're shorter term, but they cross over, and you come down, and down here you made a low, got a reversal, got a buy signal down here, and the reality is we're still on that buy signal. And we're in the midst of what appears to be a down channel here. So whether we go up, I think we're going to go up maybe next week, and maybe try to flirt with this line up here, maybe get a little bit above this prior high. And if that happens, I think I'm going to get a sell signal, but we've got to wait and see. But this is setting up again. You can see it again. Here's the high. And if this happens to roll over, and even if it runs up next week, if it happened to be right on that, you're still going to be set up like this. And look down here. I mean, this isn't going to be a divergence probably, because if it does turn down, you're not going to make a new high. But look how much lower the buying power is down here than it was over here. So if this rolls over and flattens out, you could get what this would imply if this was the top, which is a 1, 2, and then maybe a big 3 down. So this is saying, look out, are we there yet? We're not there yet, but here we are at the end of the week. And if this bar is lower than the one before it, this is going to give it a sell signal here, actually ahead of what my expectations might be for next week. So that says, be cautious. And here's another thing that I wanted to put in. And, we've seen something happen recently that hasn't happened for a long time. And frankly, you have to go back to 1981 to see the prior change in direction. And that was a top in interest rates. And they've been going down ever since, up until where we are now. I mean, which is kind of remarkable. And all of a sudden, although it's not a big deal, and if you were to compare it with 1981, people would have said, big deal. You're complaining that interest rates are going up. They had them over 20%. So you're getting a move up into, maybe where you're going to pressure 3%. Put a little push in 3%, but coming up from 0, that's a big deal. And look what's happened in the bond market. This is the ETF for the 20-year Treasury bonds. I mean, here they are at 155, which I thought was ridiculous, and had stayed up in that level for quite some time. And all of a sudden, it's starting to look a little ridiculous. Here you are in December, at 155, down at 124 now, and down 19.4% in whatever that is, 3 or 4 months. So that's kind of showing that, gee, if this really is a change in the direction of interest rates, if that's what's going on, we've got a lot of things that are now kind of saying that, are we there yet? If we're not, we're a heck of a lot closer than we were. And now a lot of things are happening that hadn't been happening up until this point. So it's a really, really good time to, maybe have your focus on something other than a roaring bull market. Maybe a time where, risk should always be the key focus. But as you know, in bull markets, that's rarely the case.
Right.
Greed is the focus. So anyway, I'm sorry about not having those other charts, and I'll get them for you next time. But I had to rush and kind of grab something that at least I feel is worth showing. That just kind of points out where it appears that we are right now. But
Well,
as I say,
I think maybe we make one last attempt to go higher, and I think the world is starting to realize. It was very sad the other day. Uh, there was some kind of an event on Capitol Hill, and everybody was hovering around Obama and talking to him. And poor Joe, he was like trying to get involved in a conversation, and nobody would even pay attention to him. It was just heartbreaking. I feel, I disagree with practically everything he does and says, but as a human being, I feel incredibly sorry for him.
Yeah, and for many reasons, there's and Kamala Harris, holy smokes, it's just. This is, and by the way, this is one of the things that a lot of times you'll see it cycles in not only our country, but around the world, where you're coming to these long-term, and we may be at this is a long-term cycle of 90 years, but what I was looking at, frankly, a number of years ago is I was thinking, boy, this cycle is there, but every cycle has a bigger and a smaller cycle. The difficulty when you get with longer term cycles and really go out there is that cycles only make sense. I think this is a true statement. It certainly is for me. Cycles only make sense when you can truly relate to them. If we're talking about 500-year cycles, it's like, well, gosh, I guess I got to take your word for it, or I've got to take history's word for it. But they say, history is merely the records of whoever won the war, right?
Yeah, right. That's who writes history. Whoever won, yeah.
You know what I mean? So it's whoever's historians won the war is for the most part the history that you're going to be reading. So, and whether that's right or not, that's why it's nice to just look at factual evidence that doesn't have any politics in it at all. But fortunately, you can see some of these things, but it's when you go way back in time, it's much more difficult because you don't have that personal thing. Some of us remember, the Kennedy assassination, for example, or some of these other major events, Vietnam War, whatever.
I was four. I think I was 4 years old, or 5. But I remember it clearly. I was in my grandmother's living room when it came on the TV.
Yeah, everybody knows where they were when they heard that, and so that kind of helps. But what I was going to say is, you've got this thing coming up now, which should be a worldwide depression, and lots of things are pointing to that all over the place. And what we were talking about was leadership or lack thereof, and it's sad. I agree with you on a personal level. It's sad with Joe Biden, and then when you look at, Hunter Biden's laptop, which on some TV channels is not even mentioned, something like that, where you've got clear evidence that's been proven. And when the government won't even, there was a time, and I would say, again, let's go back to the 60s. it's so different, and it's so important to talk about. In the 1960s, again with Kennedy, each party, if you had a bad guy, if you had somebody that was doing sleazy things, first of all, they pointed it out right away. It was not a question of who was doing it. In other words, gee, if we're doing it, it's fine. However, if you guys do it, we will make it the worst thing that ever happened in humanity. You know, this double standard is a horrible thing because it's a double standard. You have a double standard, you don't have any standards. You have sides, our side and your side, and the question is always what's right and what's wrong. And what was nice, and in the 60s, and maybe it's gullibility on my part, obviously you probably had some politicians that were doing horrible things in the 60s too, but they weren't doing them blatantly. And when they got caught, two things happened. The other party really came after them, but their own party wanted to get rid of them too, because you didn't want to be the party of corruption. And now, you know, both parties, I think, have their hands in the corruption thing. It's nobody's following their oaths of office. It's not about what can I do for the country. It's, hey, I won the election. Time for me to get really rich and pull some deals that'll, you know, take care of me and my family forever. Sadly, that's the reality of what's going on. And unfortunately, there's plenty of proof with respect to the man in charge right now and his son and so forth. So it's, you know, you wonder if, you know, on the one hand, you feel really bad for him for exactly the reasons you mentioned. And on the other hand, maybe he deserves that. Who knows? You know, fortunately, that's, you know, I guess that's not our call. But we've got a whole bunch of things coming together here, and there are a number of really, really long-term cycles coming together, much longer than the ones we're in. So hopefully, you've got something where you get some real positive effect, you know, for humanity. And maybe this is just this cycle here becomes kind of a final cleansing, and we go on to bigger and better things. That I would. I guess is the universal hope, huh?
Yeah.
So
I guess
anyway,
so.
Yeah, it's certainly, and when you're right in the midst, it's amazing what's happened so far. And I don't care whether it's COVID or the border, but it seems to be that the people in charge that are dealing the cards want to give us one crisis after the next. And it's interesting because if you're constantly in crisis, what's that force you to do, you know, subconsciously? Throughout time, that type of situation forces you to look to the central power structure, which is your government, for help and assistance.
Right.
And what that does in our day and age is forces us to listen to the news more, pay more attention. Boy, it's a scary, it's a dangerous time.
When we grew up, you got 30 minutes at night, you got 30 minutes of local news and 30 minutes of national news with Walter Cronkite. There was none of this 24-hour news cycle stuff.
Daily, all day long. Yeah, and they kind of picked the major news that was going on, told you about it. You can think about it however you want it. This happened. I like that. I don't like it. No big deal. Here's the news. Do with it what you will. And now, not only do we not get the news, so much news we don't get. I mean, for example, the Hunter Biden laptop was one thing. Some channels don't even mention it. It's a passing thought. But now we get a narrative, and we get, a dictate. And it's interesting, a dictate in a dictatorship. That evolution of government from republic to democracy to dictatorship. You never see it when you're living through it. But I point out all the time, I said, you don't have censorship in a free country. You don't have censorship in a republic. You don't have it in a democracy. But we've got it. And we've got some other things. And you don't have open borders either. I mean, it's not whether, gee, do I like open borders or do I dislike open borders? And the bottom line is, you don't really have a country without a border, do you? I mean, part of a border defines your country. Well, by the way, this is us and that's you. When you have an open border, you don't have that. And maybe there's a reason why that agenda is being pushed, like a lot of things. But anyway, I will let you go with that. And thank you so much.
Well, it was so good talking to you again. Always
I know.
hearing your opinion.
I should emerge from my cave a little bit more now. Had a number of things happen here in the past couple of months or so. But anyway, you should be look forward to spending a little bit more time with you on the show and sharing ideas and stuff.
I look forward to it.
Yeah, me too. Good, Dwayne. Well, thanks so much, and everybody have a good weekend.
Okay.
And look forward to talking with you soon.
I'll talk to you real soon.
Okay.
Okay. Bye-bye.
Yeah. Bye-bye.
Hey guys, the NQ has triggered again on the short side. We do have red and falling from 445, the correct number. We've dropped to, we'll call it 44.10. That's 35 points, $20 a point, $700 per contract traded. Now, because red and falling is directly below price, that could become support. So if you're looking for a window of opportunity on the NQ, I would suggest that 14,380 down to 14,360. That's 20 points, $20 a point, $400 per contract traded. Not a shabby way to end the week. I'll take a quick look at the ES again. Triggered on the long side, we knew that. Pull back to the BBC. So far, the pullback's holding. And when you see blue and climbing rising like this, that tells you there's a greater probability that that pullback is going to hold. Okay? If we were pulling back on the 30-minute chart and we still had red and falling, then I would say, good chance this pullback might not hold. But now here, we did have red and falling, but it held, but it's because red and falling was on its way to becoming blue and climbing. And so these two should meet up here at some point, and maybe we get one last little rally into the weekend. But on the daily chart, we're still struggling with that daily step line. Remember 45.40 to 45.60 is a nice 20-point window of opportunity. So that's the ES. The Dow still, price is always trying to get to a zone. It's still trying to get to that zone overhead. We've already gone over all the triggers on those. Russell looks like it's headed down, trigger on the short side again. Because of this low right here, see this opened as a red candle, and buyers came in and pushed it up. So maybe rather than triggering at 2001, that's a beautiful window of opportunity right there. 1997 down to 87 would be a stretch. I'd stay conservative. You want to be inside the body of this candle once price trades below that low. Now, you're below the BBC, and so you don't really have to wait for that window, because you got a window right here. Price needs to take out the low of the current candle. See how blue and climbing is starting to roll over and turn into red and falling? So if price takes out the low of this candle, then the logical thing is for price to then trade down to at least the low of this candle, or close to it. So So that's just, you know, not a big window by any stretch. In fact, 2003 to 2001, that's 2 points. But the bigger opportunities to let price get below this low. I mean, you could trade this, and then you could trade this. Let's see. Crude still flat. Gold possibly about to attempt a rally. But because blue and climbing is directly above price, that could act as resistance. Silver just kind of sitting there. And the euro could trigger again, but you got blue and climbing in the picture. So, and you can see that resistance is held at the zone. And that is the lowest weekly zone, I believe. No, that's an old zone. We're below the lowest weekly zone on the euro. This is the lowest weekly zone on the euro. So, looks like we're going to close well below the lowest weekly zone on the euro. If price could just get above that step line, might happen this afternoon. What did I say that was? 45.40 to 45.60. I mean, that would require price getting above this zone and then right up to the next zone, which it actually is 45.59/45.60. So this whole area up here, but first, I mean, we've pulled back to the BBC, we've pulled back to blue and climbing. We're only 4 minutes into the life of this candle, so I would be patient. And if price gets below blue and climbing, then 44.97, you know, right down to this window, about 7 points in there, potentially. Okay, all right. That's going to do it for the week. Our good word for the day. Michael R. says he has no audio. Rest of you guys have audio? Oh, he left, so I guess it doesn't matter. Okay, maybe he's logging back in. Well, we're done anyway. Except for the good word for the day. Okay, we talked about being courageous for the last 2 days. Today we'll talk about being secure. 2 Timothy 1:7, God didn't give us a cowardly spirit. The foundation of good leadership is security. Paul told Timothy, God didn't give us a cowardly spirit, but a spirit of power, love, and good judgment. Now, in the King James Version, it says God did not give us a spirit of fear, but a spirit of power, love, and good judgment. You must know with certainty that God called you, equipped you, and guaranteed your ultimate success. And you must keep this in mind when people stop liking you, when funding drops, when morale dips, and others reject you. If you feel insecure, fear will eventually cause you to sabotage your own leadership. Confident leaders see what is while maintaining their vision of what can be. They're rarely content with things the way they are. As President Ronald Reagan once joked, Status quo is Latin for the mess we're in. By definition, to lead is to be out in front, breaking new ground, vanquishing new worlds, and proceeding away from the status quo. Dissatisfaction with the status quo doesn't mean having a bad attitude or complaining. It has to do with a readiness to be different and to take risks. A person who won't risk change is someone who fails to grow. A leader who loves the status quo is someone who soon turns into a follower. Raymond Smith of Bell Atlantic Corp once remarked, "Administrators are easy to find and cheap to keep. Leaders, risk takers, are in very short supply, and the ones with vision are pure gold." Many people are more comfortable dealing with old troubles than doing what it takes to find new solutions. Risk seems dangerous to them. The secret lies in having a winning attitude, one that comes from being secure in who you are and what you've been called to do. Think about it. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. And to get your passport, go to eminifuturestrading.com. It's lifetime. It never expires. It includes everything we've ever done, everything we're currently doing, and anything we ever do in the future. No recurring fees, no upsells, no nonsense. We don't insult your intelligence. We simply do everything we can to help you become the trader that you want to be.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.